Yo, what is up everyone? My name is Dom and we're here to talk about unusual options activity. Alright, let's get it going. Alright, so this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. Alright, that's important, everyone. Okay, so yeah, alright, I want to talk about LIT. So this is the Global X Lithium and Battery Tech ETF. So, as you can see here, we have a position in these April 75 calls. That's right. That's not what they were buying. I'll explain that in a second. So, if you look down here at these December 17th, so this is all the way out in December of this year, so like pretty much, 12 months. Yeah, so right here we have this $1,000 block, 1,000 quantity block trade here for 870 bucks. That's a huge trade, everyone. And there's also some other ones here for these December 80 calls. Right here, someone else was coming in and buying a whole bunch of these things. So those were two different orders. Two people came in. Now I saw unusual options activity in this one, I think 4 days ago. I can't remember if I gave you guys this one 4 days ago or a different one, probably a different one. I don't remember giving you this one. But yeah, so I was in the April 61 calls. So we'll scroll up here. So that's why I have positions in April. So I was in the April 61 calls, and then I took that profit today, and then I rolled it into the April 75 calls. So I'm going to explain what rolling is. So we bought these April 61 calls. We had a nice profit in that. We sold those and we took the profit and we plowed it into these April 75 calls. So pretty much playing with the house's money at this point, and that's why I'm continuing on with this trade. This thing has run a lot. So if I didn't have a nice profit like that and was able to put it into, roll it into some different calls, I probably would have just taken the profit. But because there was a lot of buying in this one, I decided to just roll it, and I had the nice profit, took it off, and I put that profit. Just I'm playing with the house's money. So this thing has run a lot in the last couple days. So I was even hesitating, just take the profit off the table and move on to the next one. But I just took a flyer. And we'll see what happens. These options are out in April. So you got to decide for yourself. I think that this one is really up there, so maybe wait for a pullback. This one's way up there, especially the last 2 days. It has run a lot. So be careful with this one. That's all I ask. All right, next one is TAN, T-A-N. Now, this is the Invesco Solar ETF. So this is another exchange-traded fund of just a bunch of different solar stocks. The other one was like lithium mining companies, and Tesla was in that other one. This battery technology ETF was LIT. Now we're talking about TAN, which is the solar ETF. So there's like people who engineer, companies who engineers, can't even talk. People who engineer the solar panels, like First Solar. There's like Jinko Solar, Assembly. So it's just a broad portfolio of stocks that is traded as a fund. So that's what an ETF is, in case you guys needed that explanation. ETF, exchange traded fund. So it's just a basket of stocks in a particular sector. So yeah, TAN. Now both of these are renewable plays, and we have that Georgia Senate runoff going off. I'm not sure if this is a play on that. I don't typically like to trade on politics, but we'll see what happens. There was some nice buying. So in these, let's see here. We're gonna go down to these January 2022. There we go. So here's the order I was able to pick up. I was able to find. And yeah, this is a huge order. I think this is like a $700,000 order. So I like these ones, guys. Just jumped into these January 2022 125 strike calls. Stock's at about 106 right now. So as you can see here, this one is another one of those ETFs that renewable ETF that has just gone haywire. This thing used to be at 42, trade down to 21. High was about 107. And yeah, now it's pretty much at that high. So this is definitely deep end of the pool. This is definitely kind of a flyer here. Now, These options are all the way out in January 2022. That doesn't mean you should just, pile up into these things. If the stock trades down, you definitely will lose money on the options. So just be aware of that, everyone. Make sure you're trading smart. If you want to do a vertical spread, definitely do that. It lowers your cost, and it's just, when I first started out, I did a lot of vertical spreads. It cuts your costs down. You have less risk. You're capping your upside, but you're just able to put down a lot less money so you can participate in these trades and not have to spend $1,500. You could do a 10-point wide spread and spend like $300. So yeah, look into that as well. That's just what I used to do. I'm not here to tell you guys what to do. I'm here to tell you guys what I did and why it worked for me, and hopefully you guys can learn from that. So we already did the disclaimer at the beginning, so that is the end of this video, guys. Thanks to everyone who's been subscribing. I really appreciate the love. I'm trying to make this channel big so we can create a community of traders and we can share all of our ideas, share all of our thoughts, and all learn together. Make sure you guys like, subscribe, and comment. I appreciate all the love, everyone. We'll see you guys next time.